12.
12 Pak, ya.
Attendees yang nonton udah sekitar
Ladies and gentlemen, welcome to the third day of Capital Markets Summit and Expo 2020. First of all, we would like to welcome the Honorable Executive Head of Capital Market Financial Services Authority, Mr. Hussein, Managing Director, Head of Markets Equities, Singapore Exchange, Ms. Janice Khan, Senior Executive Vice President, Corporate Strategy, the Stock Exchange of Thailand, Dr. Sorafol Tulayasatien, Director, Corporate Strategy, Bursa Malaysia, Mr. Muhammad Zulkifli Mustafa, and also ladies and gentlemen who are present here today at the third day of Capital Market Summit and Expo 2020. Capital Market Summit and Expo is an annual collaborative event between Indonesia Financial Services Authority, Indonesia Stock Exchange, Indonesia Clearing and Guarantee Corporation, as well as Indonesia Central Securities Depository that focus on increasing financial literacy and sharing updates on the latest capital market development to market participants. The event brings together around 5,000 attendees consisting of regulators, CEOs of listed issuers, securities companies, fund managers, institutional investors, and retail investors. To begin today's event, we would like to welcome the Executive Head of Capital Market Financial Services Authority, Mr. Hussein, to deliver the opening speech. Mr. Hussein, the time is yours.
Assalamualaikum warahmatullahi wabarakatuh. Selamat pagi, ladies and gentlemen, distinguished guests. It is a pleasure for me to extend a warm welcome to our distinguished speakers and to all our respective participants. Currently, the health crisis has a significant impact on global economic growth. Even several countries, including Indonesia, are overshadowed by potential economic crisis. Present growth of global trading integration indirectly expedites the impact of economic crisis to several countries worldwide, including Indonesia. In June 2020, IMF predicted the economic growth is minus 4.9% in 2020, covering the growth of developed countries by minus 8%, and emerging markets and developing countries by minus 3%. Certainly, we hope that in the second semester 2020, the economic pressure will be lessened along with availability of the corona vaccine as one of the solutions for COVID-19 pandemic. Related to capital market, global and regional exchanges cannot escape from this pandemic effect. Year to date, most of global and regional exchanges have been recording negative growth. Following the global exchange growth, Jakarta Composite Index carefully moves and is significantly affected by pandemic issues. Even though the year to date the GCI records the negative growth, its movement returns toward positive. As of October 13, 2020, GCI was closed at 5,132.57 This development gives optimism after in March 24, 2020, GCI reached its lowest point at 3,937.63. We are confident that we can go through this 2020 steadily. Anticipating economic and financial services industry conditions which are still overshadowed by the crisis pressure, Indonesian government, especially Indonesia FSA, issued several policies and relaxations to assist financial services industry, especially in the capital market in responding to pandemic effect and economic uncertainty. Indonesia FSA policies in the capital market focus on three issues, which are relaxation for the industry participants, volatility control, and stability in the capital market and financial systems, as well as ease in licensing and document and reporting submission. Those policies, based on our observation, are sufficient to prevent further transactions decline and volatility in Indonesia capital market. However, we continue to perform monitoring and evaluation for anticipating future development that are dynamically moved. COVID-19 pandemic also affect every aspect of human life, including how we manage to interact with others regardless of this situation. Virtual gatherings, remote learning, telemedicine, work from home, those technological advancement have made us possible to stay engaged, which in turn have also helped us to have a sense of normalcy in this challenging time. During this pandemic, Indonesia capital market are also challenged to conform to the new ways of working by applying some adjustment to our activities and services, including the utilization of digital transformation in providing online services to our stakeholders. For instance, education and literacy activities for existing and potential investors, knowledge sharing for capital market stakeholders, and IPO workshops are now conducted fully online. Until the end of August, we have organized more than 3,500 educational activities involving almost 800,000 online participants. Capital market Capital cmse 2020, which is held virtually, is also a part of our initiative to support the financial literacy and inclusion increases in Indonesia. On the demand side, despite the large-scale social restriction or PSBB that is imposed in our major cities in Indonesia, we are still witnessing a remarkable enthusiasm from our investor, which is shown by 30% growth in the capital market new investor this year, reaching about 3.2 million investors, of which 1.3 million are equity investors. Consistent with such progress, our average trading frequency since the end of March has also grown by 21% year on year and keep reaching new records in history. We also notice a significant growth in participation of our retail investors, which almost all of those are local investors. The average daily turnover of our retail investors contributes around 43% of the total average daily turnover, a noticeable increase from the end of 2019, which was 37%. Indonesia as FSA continues its efforts to increase the number of retail investors through several policies such as issuing regulation to ease licensing, simplifying securities account opening, encouraging the industry to develop capital market products. On the supply side, we can also say that the relatively high market volatility during pandemic does not discourage our potential companies from entering the capital market. There have been 45 new listings took place since the beginning of the year, which made the total number of current listed companies to 709. This year's numbers of newly listed companies has increased by 21% compared to last year's figure. Ladies and gentlemen, distinguished guests, today's seminar topic, the role of retail investors in maintaining market stability amid pandemic situation, is relevant to current market condition where the role of retail investors becomes more and more important in maintaining market stability. Hence, together with all the representatives of the ASEAN exchanges, we are more than happy to discuss the update on capital market condition and how we can promote a capital market resilience and inclusivity, especially through enhancement of the role of retail investors in maintaining capital market stability in each country. Have a fruitful seminar. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
And to you, the seminar with the theme, the role of retail investors in maintaining market stability amid pandemic situation. The moderator for the seminar is Head of Business Development Division, Indonesia Stock Exchange. Please welcome Mr. Ignatius Denny, CFA.
Good morning, everyone, ladies and gentlemen, and all of the audiences. Welcome to ASEAN Capital Market Development Seminar, the role of retail investors in maintaining market stability amid pandemic situation. So, I am Ignatius Diani Wicaksono. I will be your moderator in this discussion. So, as we know, the year 2020 can be described in two words: unprecedented and also extraordinary. The world's first global pandemic over the last century bring us many uncertainty in every sectors, even in every way and how we live gitu ya. That impact our economy, including in the capital market sector. There were many responses from the exchange to counter or adapt with this new normal situation to maintain market stability. And also together with us today are a very prominent speaker in exchanges across ASEAN region that will share to us a very interesting topic in the respected country. Together with us today, first from Bursa Malaysia, Mr. Zulkifli Mustafa. Good morning, Mr. Zul, how are you?
I'm fine, thank you. Good morning, everyone. I'm very happy to be part of this seminar this morning.
Thank you. We are very nice having you here with us today. So Mr. Zul here is a Director of Corporate Strategy at Bursa Malaysia. And the next, we also have from Indonesia Stock Exchange. The speaker, I believe we already know, a very familiar person for us, Mr. Laksono Widodo. Good morning, Mr. Laks, Pak Laks. Hope you are in good condition, Pak.
Thank you very much, Pak Denny.
Laksono is a Director of Trading and Membership at Indonesia Stock Exchange. And the third one will be from the Stock Exchange of Thailand, Dr. Surapol. Good morning,
Hello.
Dr. Surapol.
Good morning.
Very nice having you here. Dr. Surapol here is a Senior Executive Vice President of Corporate Strategy, Stock Exchange of Thailand. He also a lecturer in Finance and Economics at NIDA Thammasat Chiang Mai Universities. Last but not least, we have a prominent speaker from Singapore Stock Exchange, Ms. Janice Khan. Good morning, Ms. Janice.
Good morning. Good morning, everyone. Thank you for inviting me.
How are you today?
Very good. Thank you.
Sure, we are very glad you can attend here.
Thanks
Ms.
for organizing
Janice
this.
Khan is a Managing Director and Head of Market Equity at SGX. So, in today's session, we will divide today's session into two parts. First will be a short presentation by every speaker from respective exchanges, or around 12 minutes each. And after that, a panel discussion from the speakers and also question and answer question. So for all the audiences who would like to ask something or would like to know something regarding the current development, for example, from these exchanges, you can please directly type the question via Q&A box in the Zoom platform, and we will discuss for several questions that depend on the limit and duration today. Without further ado, I would like to start the first session, which is a presentation from the panelists. First, I will invite Mr. Zulkifli. Mr. Zul, today he will share to us regarding the 2020 perspective from Bursa Malaysia. So, Mr. Zul, you have 12 minutes for the short presentation. I will remind you if you have 2 minutes left. Please, the time is yours, Mr. Zul.
Thank you, Ignatius. and very good morning again to everyone. I'm very happy to be part of the conversation. Uh, and as the first speaker, actually, it's very challenging because we need to see whereas anyway, I'll try my best. If we can move on to my first slide. Next. Okay. As we all know that globally the COVID-19 has disrupted the global supply chain, and, and with that, our economic growth, everything, it impacted very quickly. A lot of people are losing their jobs. Smaller businesses are closing down everywhere. But at the same time, there are also companies who benefits, from the whole situation. So in Malaysia, it's not exception to Malaysia as well. If you look at the left-hand side of my slide, the bank, our central bank, Bank Negara Malaysia, has actually reduced or cut the interest rate several times this year. And as it is now at 1.75%, is one of the lowest in our history. In fact, we haven't seen this kind of level since 2008, 2009. What does that tell you actually? With this kind of interest rate environment, the good thing about Malaysia is people started to look at other options. For those, especially for the market perspective. Previously, all the investors, they just simply put their money in a fixed deposit. But now, with that kind of interest rate, actually, they started to look for options. This is quite good, actually, from our perspective, from a stock market perspective, which I will elaborate a little bit more later on. And I'm not sure whether you can see this slide. It's a bit busy and it's a bit blur from my side, but I hope you can see it. But on the right hand side at the top, we all know, I'm sure you have heard as well that Malaysian GDP actually contracted by 17.1% in the second quarter this year. This is when the pandemic started to hit, sometime in March, April. And IMF and World Bank, we all know, projected that the global 2020 GDP growth will go down to the level of minus 4.4 to minus 5.2% respectively. And then, as I said earlier, consumer confidence, weakened very badly. You don't see that much of activities going around anymore, at least for Malaysia. And then weaknesses in the labor market conditions. Currently Malaysia's unemployment rate is about 4.7% in August, which is actually one of the highest that we have seen over the last few years. Even though the unemployment rate has improved a bit compared to May, we saw the rate was around 5.3%. And one of the sad things that we see, all of these things, whether you like it or not, will impact the corporate earnings. And for us, we have seen companies announcing lower than expected results recently. So this is not really a good news for the stock market. And one of the things that we are quite worried is we don't know when this will end. So, the uncertainties will loom for a while, and I think, it will add to more volatility to the marketplace, not only in Malaysia, but I suspect in the region as well. So can we move to the next slide? Okay. For Bursa Malaysia, I think the same thing is happening with the other stock exchanges in the region as well. We try to help our market participants to cope with the pandemic. So broadly, all of our measures can be categorized under two buckets. First of all is the financial related measures, and the other one is a non-financial. For the financial one, for instance, we gave a fee waivers for companies who wants to go public in the form of processing fee is waived, as well as the initial and annual listing fee, as long as their market cap is below 500 million ringgit. So basically, we are trying to help the smaller ones. We also give a rebate of 50% annual listing fee for 2020 for companies who are affected by the pandemic. And this will be measured by whatever results they announced in their quarterly announcement. And also, those are for the issuer side. But for the brokers, we also gave some flexibility in terms of managing the margin accounts, and then also we had relaxed certain conditions, for under this category. And all this, will take place until at the end of this year. And then for the non-financial measures, some of the things that we have given to our market participants include time extension to submit their financial statements. And we also gave a flexibility for them to conduct their AGM. And also, we also, give some a flexibility with various reportings that they were supposed to submit to Bursa Malaysia. Okay, can we move on to the next slide, please? And on top of all those measures, we also, try to manage the market to make sure that, everything operates in a fair and orderly manner. For instance, like we want to manage our investors' confidence. We all know, at one point in time, everybody was panicking, not knowing what to do. So we want to make sure that, all of the investors are equipped with relevant information. So we work very closely with the POs. POs actually are the brokers. That's the term that we use in Malaysia to ensure that there's a good market conduct. Our surveillance team work extra hard to make sure that there's no manipulation of data or anything like that, to mislead the investors, especially the retail investors. We also monitor closely on the material announcements by PLCs. So we want to make sure that whatever they announce are relevant and accurate. I think that was very important, when there's so much uncertainties and volatility in the marketplace. On the stakeholder engagement part, we also engage and work closely with the POs, the brokers, to make sure that there's no system disruptions. As I'll show you later on in one of my slides, like the trading activities has gone up so much in Bursa Malaysia, for Bursa Malaysia this year. And some of our POs actually, unfortunately, are not quite ready to manage that kind of volumes for their trading system. So we work closely with them. We have to make sure that there's no system disruption, because that will definitely affect the market confidence. So system connectivity, capacity, and stability of their trading system. We work very closely with them to make sure that everything is good. And to manage the market also, we introduced or we adjusted certain market controls like the dynamic limits, static limits, circuit breakers, and we also suspended the short sellings that will be effective until year end. And last but not least, the area that we worked very, very hard on was investor education. just because people are staying at home doesn't mean that they should be deprived from getting all the information. So we work, our investor education team worked extra hard this year, to make sure that all of the information, because we cannot do the physical event, at least they have been transmitted online. In fact, in June this year, 3rd June, if I'm not mistaken, we launched new portal just to help. And this
Sorry
is
for interrupt, Mr. Zul. You have 3 minutes remain.
Oh, really? Okay, okay, I'll
for
speed
the
up. Okay,
presentation.
moving on to the next slide.
Thank you.
Okay, as I said earlier, okay, for these slides, if you look at our index, Bursa Malaysia, actually we did quite well this year compared to all of, in fact, we are the best emerging performer among the emerging markets. But having said that, in 2019, we were the worst performer. So if you look at to the right-hand side on the sectoral indices, some of the, as I said earlier, some of the companies actually benefit from this pandemic. If you look at the healthcare and technology sectors, particularly the healthcare, the index, went up by 197.3%. This is as at September this year. Okay, we can move on to the next slide. Okay, this slide actually captured, the foreign flows. As you can see, all of us suffered by seeing the foreigners exiting from our market. Thailand, suffered the most, and Malaysia is second. And if you look to the right-hand side, at the bottom, those shows the foreign shareholding for Bursa Malaysia. Actually, even though if with all these foreign exiting, actually our foreign shareholding, is still at a very safe level of 20.9%. So despite all these foreigners exiting the market, actually, we still have substantial amount of foreign shareholders owning the shares in Bursa Malaysia. And I would say this is particularly the strategic shareholders. Okay, if we can move to the next slide. Okay, one of the things that I said earlier, because of the lower interest rate, actually, one of the most interesting happened for Bursa Malaysia. Actually, we see a huge increase in retail participation. So if you look at the ADV, for our retail, the ADV has gone up year to date by 231% year to date. And if you look in 2016, retail participation only accounted for 15% of ADV, and this year accounted for 33% of the ADV. There have been that. If you look at the right-hand side of the chart, to the amount of 11.68 billion ringgit at September. In fact, it has been a Bursa Malaysia strategy over the last few years. At one point in time, 70% of more than 70% of our market actually were dominated by institutions. So people were complaining because institutions, for being the long funds, market was a bit boring and dull. So one of the things that we tried to do, in fact, so much on institutions, because we also want, while increasing the retail participation, we want them to come in an informed manner, so not just simply coming and trade. I think we have started to see the results. See more participation from our retail in Malaysia. Okay, next slide. Okay, I won't touch too much on this one, but I just want to highlight the points that we see more and more younger people opening accounts and coming to the market.
Sorry for interrupting, Mr. Zul. Can you, for example, give the conclusion remarks before you end the presentation?
Okay, can we just move to the last slide? Okay, okay, this slide basically captured, as I said earlier, the pandemic, has some good sides to it as well. And we see, and lucky thing for Malaysia, actually, we have quite a number of companies who are in the healthcare sector, particularly the glove sectors. These are the companies who actually are supporting our index as well as here. And then we also, I think, in order to survive, I think everybody needs to work towards digital transformation. There's no doubt that one with the new norms and like less interaction, physical interactions. I think those are the steps everybody needs to move forward. And also another interesting thing that we have also identified the bullet point on the right hand side at the bottom, actually, there's a need for sustainable growth in terms of SRI and Sharia compliant investing. So maybe these are some of the areas actually, that will shape the market in Malaysia over the next few years. With that, I will conclude my presentation.
Thank you very much, Mr. Mustafa, for your very insightful presentation regarding the current condition in Bursa Malaysia. And second, we have Pak Laksono. So Pak Laks will share us regarding Indonesia capital market development. So Pak Laks, you also have 12 minutes for the short presentation. We'll do the Q&A in the last session. So please, Pak Laks, the floor is yours.
Ya, terima kasih Pak Denny. Assalamualaikum warahmatullahi wabarakatuh. Good morning, everybody. I hope you all can hear my voice clearly. What an extraordinary year 2020. I agree that this is one of a lifetime situation that we have been experiencing in a good way, actually. So let me start with what happened in Indonesia Stock Exchange with the first slide. The first slide, please. I think we can say that our market has been quite volatile. We can take a look at the chart here, the fixed index on the yellow and the yellow band and in your yellow line, and the Jakarta Stock Exchange, Indonesia Stock Exchange is on the blue line. Obviously, at the beginning of the pandemic, we are all experiencing a major volatility in almost every part of the world. Things has been clearly calmed down a little bit, and then we do have a spike in volatility in the month of July and in September. But after that, things are getting more calmer. I would say that our market has not yet returned back to its normal volatility, but nevertheless, it has calmed down a little bit. And this has been actually been the attraction of our market, especially for the retail investor that like to punt into the market. So next page, please. Here we can see actually the average daily trading value on the regular market, meaning that this is done only on the regular trading without the crossing board. If you take a look at the 2020 year to date, the average trading value is only just slightly lower than last year at 6.3 trillion compared to last year at 6.6 trillion rupiah. And if you take a look at the blue bar chart, you can see that how the retail investor has been dominating our market in terms of daily transaction. It has been growing on a steady base since 2015. At that time, is 40% of our market is dominated by the retail investor, but now the figure is 51%. And we do have quite a big shrinkage in domestic institution trading value. Last year was 25%. This year to date, is only 18%. The foreign institution has been relatively stable at 31%, although obviously this figure this year is mostly an outflow. Next. Similarly, in terms of the equity ownership, we have seen the retail ownership in our market has significantly increased, almost by double if we compare to the figure in 2015. Now the retail investor owns 12.3% of our market, the domestic institution almost 40%, and the remaining, which is 48%, is owned by a foreign institution. Now, despite the outflow of the foreign institution, the ownership of foreign shareholders is remain high. Last year is 51.7%. Now it's dropped a little bit, but still a significant 48% of our market is owned by a foreign institution, foreign investor. So I think this is one of the reason why we think that foreign investor is still very important, but we also very happy that the domestic investor, especially the retail investor, has been very active and actually acting as a shock breaker or shock absorber of those funds outflow, which is year to date totaling 3.2 billion US dollar from our equity market that has been absorbed by domestic investor, especially the retail investor. So this is a new unprecedented development that we think is very good to our market. It's also show that finally that we do have a lively and vibrant and also a strong retail domestic investor that help us in difficult times like this. Next page, please. So who are they? Well, mostly these retail investors are young people. They are millennials. If you take a look at the top middle chart, is 48% of them are millennials, i.e. they're below 30 years of age. 61% are dominantly by male investor on gender wise, and if you take a look, while they contribute 48% of our total investor, obviously they still have a relatively small kind of investment. Right now is about 15 trillion rupiah, as compared, for example, on the age bracket of 51 to 60, which is about 9% of total investor. They actually comprise of about 97 trillion of investable money that is already being put in our market. In terms of education, they are mostly bachelor's degree, 46% of them, and they are can be considered on an income base as a middle class Indonesian, of which 58% of them generating an annual income in the range of 10 to 100 million rupiah annually. Yeah. So this is the demographic bonus that Indonesia enjoy, and hopefully this will be part of our sustainable investor going forward. Next page, please. So here is the chart, the two charts that basically shows that on the left-hand side, how the average daily active investor has been developing over the past 5 years. It has been growing on a steady basis. From 2016, there are 26,000 average daily investor transacted in our market on a daily basis. It's been growing on a high double-digit basis. Now is 76,000 investor traded in our market, and mostly, obviously, a domestic retail investor. This year has been growing significantly by 39%, and if you take a look at the month of August, we reached the highest number of average daily active of equity investor of 113,000 investor traded on the average in the month of August 2020. On the right-hand side of the chart, we see here how the investor has been growing. Pak Hussein from OJK this morning mentioned also that currently we have about 1.4 million investor, as of end of September 2020, it has been growing steadily. The total investor, including those who are investing in a mutual fund, is about 3.3 million people. It's been growing strongly, but again, it's a big homework for us, because obviously in terms of the total percentage of the Indonesian population of 270 million people plus or minus, it is still relatively small. So this is something that IDX has been continuously improving on how to attract more and more investor into our capital market. Next page, please. Okay, this shows that how the investor have been transacting in our market. I think I would like to put more attention on the chart on the right hand side. Here we see basically the investor has been using more and more online trading services. It has been growing significantly over the past 4 to 5 months. This transaction through the online method. Now, this seems to be surprising for us. It is actually surprising because the online online trading platform has been in the market over the past, I don't know, 8 to 10 years ago, but only recently gaining popularity. One may ask why the sudden interest. I would say quite similar to what happened in Malaysia. Interest rate in Indonesia has gone historically low. Currently, it's about 5%. It is not low by, say, for example, Singapore or Malaysia standard, but for Indonesia standard is very, very low. So people looking for other alternative investment to gain more of their
sorry, Palas, for interrupting. You have 2 more minutes left.
Okay, thank you, Danny. And the other one is obviously people have free time, given that most of them working from home. They don't go abroad, which is the big part of the spending for most middle class Indonesian. They don't shop around because of the situation right now. They don't eat too much outside. So there's plenty of funds being undeployed, and these funds goes into the capital market, some of it at least. And it's also been shown by the fact that the liquidity in the banking sector is still plenty. And basically we are, Indonesia Stock Exchange, one of the beneficial party that from the situation. Just one more page, Pak Denny, next. So what to do with our market? I think we are going to introduce more and more new products. We have overhaul our ETF to make it more attractive and more liquid. Our ETF product is probably the largest and the most type of ETF being introduced already in the market by ASEAN standard. And we are going to introduce new products like IDF 30 futures, basket bond futures, single stock futures, and warrant going forward to make our market more attractive. And also from the index point of view, surprisingly here in this page, that the sustainable index, in this case the Sri Kahati index, which is the green index so-called, is one of the most used index and one of the most important. So going forward, this is something that we are going to do. We are going to launch a new initiative in the green index because the demand is definitely there. So with this, I would conclude my presentation today with again saying that he has been unprecedented year for us in a good, in a bad way. And the good part is obviously with the very strong participation from retail investor. Thank you very much, Pak Denny.
Pak Laksono, for your very insightful presentation. You also mentioned several recent developments from IDX that I believe will be useful for our investors today. And next, we have Dr. Surapol from the Stock Exchange of Thailand. He will share with us regarding the Thai capital market landscape in recent years. So,
Thank
like the
you.
others, Dr. Surapol, I will give you 12 minutes for the short presentation, and the Q&A session will be in the last. And I will remind you if you have 2 minutes left. So please, Dr. Surapol, the time is yours.
Thank you so much. Good morning, everyone. I would like to share with you the development of the stock market in Thailand. A lot of the message that I will speak will be quite similar to the previous two speakers. I think we are experiencing a very similar event and the experience in the market. So please go to my page 2, please, on the slide. Next, yeah. Basically, we observe higher trading volume. This is largely because of the higher volatility in the market, as well as greater retail participants. Usually, every year we receive about 100,000 new investors, but this year alone, just only the first half of this year, we have close to 200,000 new investors, and a lot of the investors that just opened the account are young, and very interestingly, a lot of them, when they open account, they start trading right away. So this is something that we observe, and I think it's very similar to what other market observe. As a result, we noticed a 19% increase in average daily trading volume in this year as compared to last year. On the right-hand graph, as similar to other market, the index dropped because of the effect of the COVID on the economy as well as the foreign fund outflow. This is similar. So next page, please. But if you take a look at the sectoral index, you notice that despite the overall drop in the index, some sectors actually do benefit from the COVID situation. And these are the sectors that involve with consumer product because people spend on the goods that they need to buy, as well as the technology products. A lot of people stay home, they use ICT, they use telecommunication, like what we are doing the video conference now, and also the agriculture product, because Thailand also produce a lot of the rubber growth that is used a lot in the medical instrument. So this has been the sector that's benefit. We noticed that the index of these sectors, we so-called the sector that's able to adapt or benefit from the COVID situation, also increase. And if you take a look at the IPO, you notice that some of the IPO that enter to Thai market this year are the companies that are in this industry, the rubber growth, the computer circuit industry, for example. Next page, please. This page shows the volatility of the market. This is similar to the previous speaker. You notice that the blue line, which is the standard deviation percentage range of the daily SET index movement, jumped up about 5 times during March. This is when a lot of exchange, including the SET, has introduced some of the measures to make sure that the volatility is in control. We no longer have this measure in place because, as you can see from the graph, that the volatility in the blue line is now at the similar level as compared to the pre-COVID period. So we are in the we are keeping watch, but now everything is in the normal mode. Next page, please. This is the sectoral breakdown on the left-hand side, but I would like to look at the right-hand side graph. This is similar to other market. We experience higher proportion of retail investor. Normally, SET is about equal proportion of foreign and the retail. In the recent year, there's higher proportion of foreign, but in just this year, we observe more retail participants. This is from both more new accounts as well as more trading from the existing accounts. I'm not saying that the other sectors are trading less because the overall pie is bigger. In all of the investor type, be it retail, foreign, institutional, they are all trading at the higher daily average volume. But in proportion term, retail is now in greater proportion at around 43%. Next page, please. We also have quite a number of products, not only stocks. One thing that I like to highlight, in time of volatility, we also observe increase in volume of the derivative contracts, and especially on the SET 50 index futures, as well as gold futures. This is something that has been quite popular this year in addition to the stocks. Next page, please. This is something that we want also to promote more of the connectivity to this region. This is something that we work with other exchange and as well as to bringing the linkage of the products. For example, we have DR of Vietnam ETF. This is in 2018. So Thai investor who are interested in invest in Vietnam can buy a DR that is listed in Stock Exchange of Thailand, and the DR would be have the underlying in Vietnamese ETF. What we notice is that after the product is established, we observe not only greater volume of trading in Thailand DR, but also greater volume of the trading of underlying in Vietnam, 70% of which is from Thai investor. So this is something that could be a win-win, and in the spirit of the regional exchange, this is something that we can do more. On this, I'd like to highlight that as the ASEAN exchange, we have developed the website. It's called the ASEAN Exchange website. If you're interested, you can take a look at that, ASEANexchanges.org. This is some place that you can find all the information from the 6 exchanges all in one place. Not only the stock information, but also research, as well as some information for if you're interested in contacting each of the broker in our country. Next page, please. Another highlight that I think the Indonesian colleague mentioned is that one of the things that we noticed is that investor, retail, as well as foreign or institution are now paying more attention to ESG. ESG stands for environment, social, and governance. We done a little study in our exchange. We noticed that investor in choosing which stock to buy in Thailand, they place more attention whether the stock is in our local ESG standard, which is THSI. So they place more emphasis on that. And we are also about to publish a study saying that if you take the ESG score into account, the performance of the investment perform quite well during this time where right now the index is quite volatile. So this is something that is becoming a trend, not only as a PR opportunity, but as well as the investor actually pay attention on the being good. Okay, so this is something that we are noticing. Next page, please. Also similar to other presenter, we noticed that there are more online usage. This is something that is quite interesting because we try to push this for quite a while. Online trading for Thailand has been quite in a high ratio already, 70 or 80%. For the new generation, it's almost 100% trading online. But the digital in general has been quite been catalyzed by the COVID, because I think as people stay at home more, they connect to us via online. One example would be that normally for the Stock Exchange of Land, we have event inbound roadshow, and we do it physically. We call Thailand Focus. Normally, we accept about 1,000 investors that are able to join the event. But this year is the first time we do it 100% online, just like what we do here. We noticed that the number of viewers increased about 20 times. And in other area, we also have a lot of online class, and we saw the search in the investors at home. They learn more about the investment during the COVID lockdown period. So this is something that is like a blessing in disguise, that a lot of the digital trend is becoming more of reality. Also, the government just passed the law that allow us to do more of the activity online. For example, conducting annual general meeting for companies via digital video conference. So this is something that could be the trend that is lasting, has some positive impact. So COVID not only have the negative, but also have some positive on this front. On next page, please. This is my last page. I like to highlight some of the theme that investors are still watching for investment in our stock market. The first is high dividend. Given a lot of the drop in the stock price, so it turned out that some opportunity for investor to invest in the good stock that has a high dividend, given the rebase of the stock price. So this has been quite popular. The ZTHSI, as I mentioned, people are
Sorry,
paying
Dr.
more attention
Surapo,
to.
you have 2 more minutes left.
Yeah, they are paying more to the ESG or sustainability issue. So this has also been quite popular. The CMV exposure, we are still developing this. As I told you that we as the ASEAN exchange, we should do more of connection. So this is something that we can link our product as well as investor together. And for Thailand, the well-being via the service economy. At the moment, the well-being on the tourism side has been heavily affected by the COVID. But however, on the health side, similar to our Bursa colleague, we observed that a lot of the equity on the health hospital has been doing quite okay. So this is something that to watch for, because it's the core strength of the country. So in all, I would like to summarize that as you say, this year has been quite unprecedented, but at the same time, the unprecedented come not only as challenge, but come as opportunities. Greater retail proportion, higher focus on sustainability issue, as well as the ability to capitalize on the digitizations of the capital market. So this is the 3 things that I want to mention. So thank you very much.
So thank you very much, Dr. Surapol from the Stock Exchange of Thailand, from your very insightful presentation. Now, last but not least, we have from Singapore Exchanges, Ms. Janice Khan. Ms. Janice will share for us maybe regarding the recent capital market development in Singapore Exchange. So Ms. Janice, please, you also have 12 minutes to share your thought regarding the capital market, and the floor is yours.
Hi, good morning, fellow panelists. Thank you, Ignatius, for the introduction. As today's theme suggests, and many of the speakers have spoke before me, this year is unprecedented, is extraordinary. I would also think this is a year of transformations, as the disruptions will drive business model evolutions, and exchanges will adapt in the ways we operate, including very basic daily routines and operational workflows. Across the world, there has been a significant increase in the adoption of digital services. I think many of the markets have experienced similar things, both within and outside the organization. more so to comply with the various social distancing measures that our government has set on us. So let me take the opportunity to share a few perspectives from Singapore. On the onset of the virus outbreak, the exchange in SGX, we have focused primarily on three key areas. First and foremost, being the health and well-being of our employees and investors. Secondly, is to work seamlessly with our stakeholders to across the financial community to ensure that our marketplace remains robust, uninterrupted, and accessible to both our local as well as international participants. And most importantly, we also want to contribute to the community to help those who are affected to recover from this pandemic. So with some scenario planning, SGX was very fortunate to recognize the risk of the business disruptions of COVID relatively early on. And hence, we have taken proactive steps to prepare for a potential lockdown scenario in the workplace. So as early as February, we activated our BCP and split our staff into separate teams to work from 2 office sites. At that time, Singapore has not started lockdown yet, but we thought, why not, right? Use this opportunity to practice our BCP. So we also rotate people to work from home and took a painful decision to also cancel all events involving external parties to happen on our premises to start the social distancing measures. For those of you who know Singapore, it will be very challenging in the month of February as we are in the midst of the Lunar New Year celebrations and many festive activities and networking sessions has already been organized and invitations were sent. So we have to cancel all of them and also cancel all business travels. So when the COVID situation in Singapore deteriorated in April and our government started announced a lockdown, here in Singapore, we term it as a circuit breaker, like the stock market. Only 10% of our staff are permitted to work in the office. So by then, SGX already have practiced about 2 months of operating with very minimal staff on site. So we are able to control key systems remotely and adapt quickly to the situation. As a matter of safety and precaution, our companies, we have an enterprise risk team. We procure and distributed face masks, hand sanitizers to all staff, including those who work from home. Everyone who comes to office need to wear a mask. And we have a lot of stickers around the office on safe distancing for at least 1 meter apart from everyone at all times. There's also something that we did quite radically is we closed all the depository counter service. So we urge all investors to go online for their transactions. So this is something quite difficult, as you know, for a lot of the older investors who are not used to using the digital platforms. So we do have staff as well as the iPads in place to go through some of these steps with the investors and urge them to go home to perform the transactions. So for the community, the SGX introduced a care package that's about Sing$ 5 million to support and relieve the measures for the outbreak. So this is to bolster the additional efforts of our government by the financial community, so that Singapore will remain a resilient global marketplace. So the 5 million it will be given out over a period of 12 months, and the package comprises of 2 parts. 1.5 million contribution is for National Healthcare Support Program, including our Courage Fund that is run by our national charity, the Community Chest. And remaining 3.5 million is used to support our listed companies on our market, as well as our employees and contract staff. So we believe that our contribution is important as we experience record volumes on our market. We also would like to contribute back to our community and to the larger ecosystem who has been there to support the Singapore economy. Because of the early internal readiness, It has allowed SGX the time to focus more to also coordinate across our financial community during the circuit breaker. So that includes broking firms, depository agents, banks, our market makers who are critical to the securities and derivatives markets operated by SGX. So it is 100% uptime for the entire period. Like many markets, we experience good volumes, settlement instructions at the peak of the pandemic in the first half of the year. So it can be operationally challenging. So we have to adjust some of our cutoff times so that our brokers can continue to put in all the requests and process all the transactions before the start of trading the next day. So one could imagine that if you are not adequately prepared, the voluminous transaction can be challenging because everyone mostly is operating from remotely. SGX as a market operator, we believe that keeping the markets open is essential since the financial markets are critical for managing risk and safeguarding the resilience of the economy. So I believe that the role of an exchange for price formation during this period has intensified during this crisis because of the higher market volatility, as most of the exchanges have also experienced. So we kept our markets fair and orderly. So our dynamic circuit breakers are working well for securities market. Our price limits are working for our derivatives market. More so to avoid any large price gyrations from happening. So there's a couple of areas I would like to highlight to the group that the pandemic has actually played to some of our strengths. First, I think it has reinforced the multi-asset strategy that SGX has been building. Our shelf of products now comprising of equities, fixed income, currencies, and commodities contracts have facilitated clients to manage portfolios comprehensively across different asset classes amid the heightened uncertainty. Secondly, our derivatives market have clearly benefited clients who need to trade and rebalance their portfolios round the clock and even on public holidays. And we have seen like 2 very long holidays during this period, which is the Lunar New Year holidays in China during February and the Japan Golden Week in May. So this flight to quality marketplace that is expected of international participants on SGX, we have been living up to the expectations. Similar to most of the markets as a result of the pandemic, we embrace a lot of digital platforms usage, like moving our academy training classes, that's for the retail investors, as well as our depository services fully online. Listed companies also held their AGMs virtually for the first time. And of course, all staff meetings and interactions are largely on video conferencing like this to minimize in-person contact and interactions. So since June this year, our circuit breaker has ended. So our economy has slowly opened. COVID cases in Singapore has fallen significantly in recent months, very low or zero local community cases on a daily basis. So as of now, about 50% of our staff can work on site in 2 offices, still wearing masks and of course with full social distancing measures still in place. So for Singapore, we are also looking to reopen our borders in a safe manner with air travel bubbles. For instance, we now have a...
To remind you, you have 2 minutes left.
Okay, thank you.
Interrupting.
No problem. Yeah, for instance, we now have a reciprocal green lane arrangement with China and South Korea for essential business and official travels. So, of course, we also wish to, continue to work on the different countries, especially in our ASEAN neighbors. The full resumption of air travel and normalcy of activities, I think will still take a long time. All in all, I think Singapore and SGX, we have adapted well and recovering well from this pandemic, but we cannot take things for granted. We will continue to stay vigilant and combat the virus while operating safely and responsibly in this new normal. My last wish is hope a vaccine will be available soon for everyone. so that life will return to normal for all of us. Thank you.
Thank you, Ms. Janice Khan from Singapore Exchange for sharing your thought and the recent development of capital market in Singapore. So I think there are already many questions in the Q&A from the audience. So I will start with one interesting question. I think this is the same as what I have thought. So the one thing that I noticed from the presentation from all of the exchanges is there's a changing landscape, particularly from retail investors. The increase from retail investor trading activity is around 10% from most of the exchanges. From BM, I noticed that 21% increased to 33%. Well, from IDX, from 43% to 55%, and from Stock Exchange of Thailand, 34% to 43%. So I will direct this question to all the panelists, starting from Bursa Malaysia. The question is like the same with Mr. Adel Rus' question. Please share your view on the expansion of retail investor during COVID-19 pandemic. Will it be less longer to the post-pandemic era? And also, what are the key determining factors which affect the expansion of retail liquidity in your country? So maybe we can start from Mr. Mustafa. How about your thoughts regarding the changing landscape of retail investors?
Hi. Okay. I think this is a very interesting phenomena actually that is happening in the region, not only in Malaysia. As I said earlier, for Bursa Malaysia, we have done a few things to push retail investors to where they are today. One of the things that we started about 6-7 years ago was actually investor education. Place more and more emphasis on investor education because we want people to come in an informed manner. It's not just, I buy stock because my friend or my uncle or my auntie buys something. So we don't want that anymore. So we want all these investors, when they come in, they know what they're doing. So that's very important. And with all these changes that are taking place, the second part that fit nicely is digitalization of some of the platforms. Once you go digital on educations and also digital on a lot of the other things that the components for trading or investment, I think that fits very well into whatever that we are facing right now. In fact, as I also mentioned in my slides earlier, we accelerated a few features. Currently Bursa Malaysia, we got 3 main platforms for the retail investors. One is the Bursa Academy. That one is for beginners, for them to actually learn about investment in general. The second portal that we have actually is called Bursa Marketplace. This is the portal where people can find lots of information, research reports, all sorts of things, thought leaders' view on certain things. This is actually for retail as well, a Bursa Marketplace. And the last portal that we have actually is is called Bursa Anywhere. This is we have a website as well as apps for this one to help retail investors to actually check their balances. Okay, let's say if I'm retail investors, I got 3 accounts with 3 different brokers. Using this app, I can see the consolidated amounts of shares that I have for each broker and what are the market values and how much did I invest on them and stuff like that. And these apps or portal as well also allow me to do certain things. For instance, register for dividends and all the other stuff. And also this portal also currently allow like if I want to reactivate some of my dormant accounts, these are some of the features that actually we introduced during the pandemic. So I think all in all, I think it's very important given the current circumstances where people are becoming more and more savvy when it comes to technology. It's very important for to go into the digitalization in all aspects of investments.
Mr. Mustafa, so Does Pak Alex want to add something regarding the same question or maybe
Yeah.
another opinion regarding the
Uh,
expansion of the retail investors?
Yeah, thank you, Pak Denny. I think we discussed the reason why suddenly there is a big demand in or big surge in local investor retail participation. I think the low interest rate, plenty of cash lying around, and plenty of time actually at home and to look at your devices. But I think more importantly with the development of this retail participation is the fact that retail investor nowadays are chasing the blue chip companies, the so-called IDX 30 or LQ45, which is the benchmark of our most liquid and most proper companies that are listed in Indonesia Stock Exchange, are the one that's being chased by the retail investor, which is quite different from the periods before, of which a retail investor has been chasing the smaller stocks that have been rumored in the market about being doing this and that. Now, I think the focus is more towards investing in fundamentally sound companies, in the liquid companies. So I think this will reduce the element of surprises for this retail investor if there is a change in in market direction. And hopefully this will lesser the fact that when the market turns around and you get caught in a negative equity situation, then people won't trading in our market anymore. So hopefully this is a trend that will continue going forward. Thank you.
Okay, thank you, Pak Laksono. And now, due to we have limited of time, maybe I can jump to another question so that we can have a broader discussion today. This time is from May. The question is from SET. So we can conclude that the changing landscape from the pandemic is the increase of the investor retail liquidity. So there are many investors that join our market. And the question is, it's good from May, how do you manage to balance the current development with any potential risks, including cybersecurity or infrastructure readiness? And also, as we know that investors are prone to herd mentality, for example, foreign sell out their portion, so the retail investor usually also sell out the portion of their shares. So how you mitigate such risks? So we have a lot of new retail investors particularly. I will address this question to the Stock Exchange of Thailand. It's the same as from a question from audience. So please, Dr. Surapol, if you have any opinion regarding how to protect the investors.
Two ways. At first, we continually review and upgrade our infrastructure to be able to handle larger volume. Actually, we have been tested last year when the MSCI increased the weight of Thai stock in their emerging index. We had on a single day, the volume is about almost close to $7 billion in that day. The system was able to handle. So with the increase in the retail as well as the overall trading volume, I think our system is capable to handle. So that's one thing. The second thing is on the cyber risk. This is, of course, something that is emerging. We see a lot of news in recent months that many of the exchange has been prone to the cyber attack. So we pay the utmost attention. Every year we do the cyber drill. We as an industry, because this is something that exchange cannot do alone, but we have to do with our market participants, the brokerage, the banks, everyone, to test and do the cyber drill altogether. So this is something that we are aware and we continually consult with the industries. As well as on the herding behavior of retail, I think the most important thing is to give them the proper knowledge and proper information. We provide all the information through uh, 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 many channels on the website, on the Twitter, on the API feed of the information. Investors have a lot of information that they can access. Investor is also allowed to access our educational course online. We have roughly about, I think it's 4,000 online materials that investor can learn, ranging from the very basic on the financial literacy to the more advanced one that are related to investment. So this is something that we have been offered, and we are quite happy that the digitization during the COVID period has led to investor not only trade more, but they also learn more from our online materials. So that's my 2 cents on your questions.
Thank you, Dr. Surapol, for your explanation. I think it's very clear and your insight from the Thailand to us in Indonesia. And I would like to continue the question for Ms. Janice. How about in Singapore Exchange? How is the retail transaction there? Is it also the same as the other countries, which is the retail portion is increased in the Singapore Exchange?
Yes. Maybe let me start with giving a better picture, since I didn't really mention our the securities daily trading value. So during this 9 months, what we have seen is that our daily trading value have increased by 40%. So we are at 1.5 million daily average securities trading value. But our market is slightly different from the other countries. More than 50% of our trading comes from institutions. Um, However, we experience similar retail participation increase like the other markets. So we used to have like 15% of our trading volume coming from the retail. So during this period, it has increased to 20%. So it's still obviously a very small percentage compared to the other markets, but this is the structure in Singapore. I believe that the need for high level duty of care to retail investors is universal, whether our retail participation level is 20% or it is 50 or 70%. Yeah, so that duty of care doesn't go away. At SGX, we use similar mechanics like other exchanges. Investor education is the main factor we believe is important to improve the financial literacy of our retail investors. We have an academy called the SGX Academy. It conducts about 30 education programs in a month. So that's in addition to other programs that we may jointly organize with our brokers or special interest groups like the Securities Association for Retails in Singapore. So during this period, our programs continue to run, even though they have now all moved to online instead of face-to-face. So we use a combination, be it WebEx, Zoom, Microsoft, Live Facebooks. We also use social media like Telegram and Facebook Live to engage our participants so that they continue to receive information from the exchange with regards to the listed companies and also make their decisions on trading. So as a result, even from participations from our online education, it has grown like 3 times in attendees, as majority of the population are working from home, seems to be getting used to using video conferencing as well. Specifically on a retail segment, the high interest matrix that we have seen is 3 areas. One is we see 50% growth in terms of new accounts opening, 25% growth, I'm talking about year on year, in terms of active retail investors, number of active retail investors, and in terms of trading activities, almost 100% growth. in terms of the interest of what they are buying or selling, the price dips. I think STI dropped about 25% at its lowest during the pandemic, and that has fueled both trading activities as well as retail investors looking for entry points to build position. And these are mainly still in index stocks because they are deemed safer, and also in ETFs, which is passive investment, well-diversified portfolios. So, for example, two of our Singapore flagship STI ETF have garnered more than $800 million in net buys since the start of the year. So this has been very encouraging for us in terms of getting our retail interested in trading more of Singapore, the stocks listed in Singapore and the products listed on Singapore Exchange. For cyber security, infrastructure, and data protection, I think we have also done quite a lot of work in this area. The exchange as well as our clearinghouses are required to participate in cyber security drills, as well as clearing counterparty drills with our Monetary Authority of Singapore, which is our regulator, on a yearly basis. Yeah, so that this has helped us to keep up with our infrastructure, as well as being able to handle emergency situations as scenarios were being planned out during these drills were quite real. Yeah, including like default situations or cyber attack, for example. One thing that we realized by dealing with retail is actually data protection is very important. So we have to really educate them to make sure that they don't share passwords, for example, and they know how to close off the applications after use, especially the not so savvy older population.
Thank you, Janice. Sorry, I must interrupt because we want to cover more question from audience.
Okay, sure.
Sorry for
No
interrupting
problem.
you.
Yep.
So what Janice mentioned is also answering the question from Flor, from Puspa, is there digital technology disrupting, especially in financial industry? So before we continue with the next question, I would like to thank you for Dr. Surapol for your presence today, for sharing us many insightful presentation and also discussion. So Dr. Surapol must leave, and we'll from Indonesia Stock Exchange want to say thank you very much. If you have any conclusion remarks, please do so. Okay, thank you. So we will now discuss several questions from the audience. I think one is remain unanswered. Continuing from our discussion whether the retail expansion is very increased, and the next question is from Harry and also Devia Indah Purnama. They want to know if there any policy that or any strategy that exchanges do to first to protect the retail investors, or and also to promote capital market more to retail investors. So next, I believe from Bursa Malaysia maybe can give us some short of answer regarding this.
I think for protection of investors, I don't think there's so much of an issue anymore. I'm sure all of the exchanges in the region, we are quite stringent when it comes to monitoring the unusual activities in the market. I'm sure all of us, in fact, I know that our regulation team have been working very closely with exchanges in sharing their experience, as well as sharing information about the trend in this market. So I would have assumed investor protection is not so much of an issue anymore. But having said that, as I also said earlier in my presentation, our surveillance teams is working very, very hard just to make sure that all the announcements that goes out from the companies are accurate and not misleading. And then on the promotion side, as Janice mentioned earlier, despite the COVID, the activities still go on, but rather than physical promotions, we are now moving towards online and digital space. And I get that's all for me actually. Yeah.
Pak Laksono, maybe you can add regarding Puspa question. What is Indonesia Stock Exchange strategy in this current digital transformation, particularly in the pandemic situation? Please, Pak Laksono.
Thank you, Pak Denny. I think I would like to just to add on the investor protection, especially for retail investor protection. I think this is still relevant because since last year, we introduced the so-called special notification. So stocks are given a notification. Say, for example, L. L means that they have late submission of their financial report. So those are one of the issues that we are going to raise to the public to make better awareness about what kind of stocks that they investing in, what kind of situation of that particular stock that they currently facing. So it's part of the ongoing education about how to invest in our market. And apart from that, obviously, we have continuing education, capital market seminars, capital market education program to increase the awareness of investing in the Indonesia Stock Exchange. Now, this is a long standing and we are in marathon because, as you know, our investor is still relatively small compared to the size of the population. And with this pandemic situation, actually, there's more and more effort from us to get people more involved because nowadays the younger people are more savvy in terms of technology, so easier for us to introduce the new education program through website or through their devices. Thank you, Pak Denny.
Okay, thank you, Pak Laksono. Maybe the next question, actually, this is addressed for Stock Exchange of Thailand, but I believe Singapore Exchange also have a liquid transaction of stock index futures. So there's one question from the floor. Please share the impact of COVID-19 pandemic to derivative transaction, especially for stock index futures product. How about the stock index futures product performance, specifically in this pandemic situation? Ms. Janice.
Yeah, thank you for this question. The Singapore Exchange derivatives product shelf is actually very comprehensive. So with regards to equity index derivatives, which is the stock index futures, our current shelf covers almost 100% of the Asia GDP when it comes to exposure taking and risk hedging. So we have contracts in China, for Japan, for Taiwan, Indonesia, Singapore, and other Southeast Asian countries as well. So all this has helped, I guess, most clients looking to hedge their exposure during this COVID period, especially if they have invested stock portfolios in Singapore and in other capital markets. The hedging instrument using futures has been very popular during these volatile market conditions. So obviously our volumes have increased quite significantly. And in the derivatives market, it's actually traded almost 24 hours. So aside from just the Asian market hours, we have the T+1 session, which is the afternoon and all the way to next day 5 o'clock, around about 5 o'clock in the US time zone. So what we have observed is, besides just the Asian time zone, which is the T session volumes spiking, actually T+1 volumes has also increased tremendously across all markets. At the start of the pandemic, actually China is the first market that's been affected. So obviously our product, the FTSE China A50 index futures, have record volumes for a few months during the early part of the pandemic. Then it slowly will shift when China recovers. We saw that some other markets, like Japan, for example, has deteriorated in terms of the situation. The risk management activities are then shifted in the other contracts. So it's a combination of products that we have on the shelf to service different needs during different times. So it has overall done very well for our equity derivatives shelf, which is the stock index futures market.
Thank you, Janice. I think we have almost covered all the question from the audience. Maybe this is the last question where I will directly direct it to Bursa Malaysia. This is from Hendrik Syahputra. You mentioned that Bursa Malaysia gives the flexibility in margin condition. Can you elaborate more? What kind of condition? Is it a relaxing of ratio or haircut, or maybe increasing the eligibility shares for the margin transaction? Please, Mr. Mustafa.
Actually, the relaxation of the margins are covered that we give to the brokers. One of them actually is flexibility for the broker to exercise whether or not they want to foresell the certain stocks in the accounts. If it falls within below a certain level. Rather than we waive, not waive, we sort of like relax the rule temporarily, so that rather than you go outright and shop and for sell certain stocks when it reaches certain prices, we leave it to the brokers to make their own judgment. We also expanded the kind of collaterals allow as for the margin accounts. And these are two of the bigger things that we allow for the margins. Actually, if you are interested to know the details, we issued the announcement on 26 March, actually. So if you can just go to Bursa Malaysia website, under company Bursa Malaysia, you look at the announcement on 26 March, it has all the details for this particular relaxation on margin accounts.
Mustafa, okay, so we have a very insightful presentation and discussion today. Before we end the session, I would like to ask maybe Pak Laksono or Ms. Janice has last closing remarks to bring confidence to the investor who saw this session. Please, if you have, I will give you 1 or 2 minutes to share the closing remarks for the investors.
I'll let Miss Janice to do the bidding first.
So ladies first.
Yeah. Okay. Thank you. I would say a few things would probably be emerging trends for the coming years. First, I think is mentioned by the Stock Exchange of Thailand speaker with regards to products around responsible investing, which is ESG. Personally, I believe this is something which is increasingly important for the market, not only for retail but also for institutions as well. Both are actually looking for more opportunities to be able to invest their money in a responsible manner. So the knowledge sharing on ESG data, ESG classification and ESG standards This will be a very key in terms of investor education in the coming years. So both, I think, Singapore as well as SGX as an exchange, we are committed to driving sustainability efforts across industries, and SGX being in the core of a financial ecosystem, will definitely be very actively involved in Singapore's mission and contribute to the broader Asia context as well.
With short closing remarks, Pak.
Okay, thank you very much. First of all, I would like to thank the panelists that has spending their precious time with us, highlighting what happened in their respective markets. And for this, my own personal remarks is that the retail investor are likely here to stay, given the fact that they have reached an experience of which it is actually quite easy to invest in the Indonesian stock markets through their gadgets. So with that, I would like to thank you for everybody and return it to Pak Denny. Thank you, Pak Denny.
With that, I would like to say thank you very much for our panelists today for sharing the insightful presentation and also the discussion. So as a closing remarks for me, we note several things from today's discussion. First, the changing landscape, that the investor retail portion is getting increased now and hopefully it will less sustainable. And after that, looking at the data and also not all the sectors has been impacted by the pandemic COVID-19. Some sector is still experience positive in this pandemic period. And many measurement has been taken by every exchanges like has been presented by our panelists. And from the statistics, we can see that in the recent month, the market is getting better and better and is recovery reflected from the volatility and also the indices. So last but not least, I would like to thank you for all of audience for joining us today. Hopefully today's session give insight to all of us, and like all of speaker here, send a strong message that we must remain calm and trust the market. Hopefully with this presentation, we can do that. We can support our market and our market will grow better and to fight this pandemic COVID-19. Thank you.
Bentar dulu, bentar.
Thank you, everybody.
Thank you, Mr. Denny, and thank you for all the exchanges from the region in the Southeast Asia. We thank you for joining us today. We're very grateful to have all the panelists from the exchanges in ASEAN, Singapore Exchange, the Stock Exchange of Thailand, as well as Bursa Malaysia. We really appreciate you coming and presenting in the third day of the Capital Market Summit and Expo 2020. Ladies and gentlemen, we have come to the end of the seminar this morning. Thank you for joining our fruitful discussion, and we hope that you have gained some insights from the experts in the regional capital market regarding the seminar with the theme today, and we hope to see you in another seminar. Thank you and enjoy the rest of the day. Good morning.